Welcome to The Explainer. Today we're going to break down the mechanics, the paradoxes, and the absolute powerhouse financial engines behind the world's most staggering personal fortune. We see the headlines all the time, right? But understanding how this wealth is actually structured gives us a masterclass in modern equity, risk, and scale. Let's dive in. To really grasp the scale we're dealing with here, just take a look at this number. By February 2026, Elon Musk's net worth hit an unprecedented, mind-boggling peak of $800 billion. That is an 8 with 11 zeros. For some context, he became the first person to cross the $300 billion mark back in 2021, he hit $400 billion in December 2024, and the numbers have just continued to compound at a rate we've historically never seen before. But here's the really fascinating paradox. Despite holding more wealth than the GDP of a lot of countries, Musk famously describes himself as cash poor. He's professed to have very little interest in the material trappings of wealth, even pledging to sell almost all of his physical possessions. So what's the reality? Well, a massive 58% of his Tesla shares have actually been pledged for loans. His fortune isn't just sitting idle in a vault somewhere, it's completely active and highly leveraged. To solve this paradox, we are going to audit the house that equity built. We'll cover the anatomy of a fortune, the core empire, the Tesla mega grant, the SpaceX IPO, and finally, spending the billions.
All right, part one, the anatomy of a fortune. Let's take a look at the foundation of this immense wealth.
Musk's fortune definitely isn't sitting in a traditional bank account. It's almost entirely tied to corporate valuations, which creates some extreme swings. While he reached that $800 billion peak in early 2026, just a year prior, between December 2024 and March 2025, his net worth dropped by a staggering $126 billion. Why? Well, that was driven by a 70% profit decline at Tesla, along with some public backlash over his political ties. When your wealth is entirely paper equity, market shifts and public sentiment literally dictate your daily net worth. Moving on to part two, the core empire. So what exactly does this massive equity portfolio look like today? His entrepreneurial journey spans 3 decades. He started out in software with Zip2 in 1995, which sold for over $300 million. Then came the PayPal merger, netting him $175 million in 2002. He poured that cash into founding SpaceX and then joined Tesla as a lead investor in 2004. Fast forward to 2026, and we see the culmination of this entire timeline, a historic $1.25 trillion merger of SpaceX and his artificial intelligence startup, xAI, creating this vertically integrated innovation engine totally focused on space-based computing. Just look at the sheer concentration of ownership here. He owns 79% of X, 54% of xAI, and 42% of SpaceX. He is locking up massive majority and near majority ownership stakes across some of the most highly valued private companies on Earth. This is definitely not your standard diversified index fund approach, right? This is immense, heavily concentrated equity risk. Okay, part 3, the Tesla mega grant. This is where we see the most crucial lever of his wealth generation. You've really got to wonder, how does a CEO pull down a $55 billion payday without taking a traditional salary? Because remember, Musk doesn't take a standard paycheck from Tesla. The answer is the CEO Performance Award. Back in 2018, Tesla's board approved this absolutely unprecedented all-or-nothing compensation structure. It granted him roughly 20.3 million stock options, but only if he met some extreme milestones. To fully vest, he basically had to grow Tesla's market capitalization by $600 billion. If he failed, he got nothing. But if he succeeded, the potential payout was $55.8 billion. To really grasp how wild this is, let's compare it to his peers. The median grant for a top-tier executive is just 2.1% of total outstanding shares. Tesla awarded Musk's 11.7%. It absolutely dwarfed every other compensation package in corporate history, tying his personal earnings directly to the company's hypergrowth. This scale of payout fundamentally reshaped what everyday investors expect from corporate governance. But obviously, a payday of this sheer scale led to a fierce legal battle. In January 2024, a Delaware court actually struck down the $55 billion grant. They called it an unfathomable sum and cited flawed compensation-setting processes. But the story doesn't end there. Shareholders pushed back and re-ratified the package in June. Then, in late 2025, they approved an even larger potential $1 trillion pay package for the future, right before the Delaware Supreme Court officially restored that original 2018 grant. It's a total legal roller coaster that really highlights the friction between unprecedented compensation and traditional corporate rules.
All right, let's pivot to part 4, the SpaceX IPO, the next massive catalyst for its net worth.
In early 2026, SpaceX quietly filed confidentially for an initial public offering. The target valuation, an astronomical $1.75 trillion. If those numbers hold, they're looking to raise $75 billion, making it potentially the largest IPO in the entire history of the American stock market. For 24 years, retail investors couldn't touch this company, and well, that's about to change.
But what are investors actually buying into here? While the public focuses almost entirely on the flashy side of SpaceX, the Starship rockets, the eventual Mars missions, all the scientific exploration, the true economic engine driving this trillion-dollar valuation is actually the satellite internet network, Starlink.
The crucial takeaway here is that Starlink is a complete cash-generating machine. By February 2026, it reached 10 million active subscribers. It crossed $10 billion in annual revenue in 2025 and is projected to hit up to $24 billion by the end of 2026. Starlink effectively operates as a global utility monopoly for remote and unserved areas. We're talking everyone from rural communities to commercial ships out at sea. This is the recurring revenue moat that actually funds the interplanetary ambitions, totally shifting the power dynamics of global communications.
And finally, part 5, spending the billions. With paper wealth of this magnitude continuously generated, where does all this capital flow in the real world? Looking objectively at the data, Musk deploys vast sums to aggressively shape his vision of the future. During the 2024 election cycle, he became a massive mega donor, directing over $291 million into super PACs. At the same time, tax records revealed a $100 million donation to create a new foundation focused on establishing STEM-focused primary and secondary schools with plans to eventually expand to the university level. He's using his capital to proactively pull the societal levers he believes are the most critical.
And of course, we've got to talk about the tax bill. While investigative reports noted he paid no federal income tax in 2018 because of how his wealth is structured, eventually the bill comes due. Exercising those massive stock options triggers historic tax liabilities. In 2021 alone, after selling off portions of his Tesla stock, his estimated tax bill was a staggering $12 billion.
From starting Zip2 in the 90s, all the way to launching orbital data centers today, Elon Musk's wealth is the ultimate testament to taking immense, concentrated equity risks. He's bypassed traditional salaries, linked his fortune entirely to the execution of seemingly impossible milestones, and essentially completely reshaped how corporate value is built and governed today. So, with the impending SpaceX IPO and all this unprecedented equity giving him unprecedented influence, it really leaves us with one giant question. What on earth will the world's first trillion-dollar empire build next?